for this decade, looking out this decade, I tend to be dollar bearish, commodity bullish, Bitcoin bullish, pretty gold bullish. So I've shifted my view on this a little bit, and so it's somewhat in the middle. So I think basically the global bond market, the global currency market, that's such a big market compared to how big gold is, compared to how big Bitcoin and cryptos are, where I viewed those as competing against that global paper market rather than just against each other.
Yeah.
And so, for example, when gold peaked in August of 2020 and turned down, I didn't consider that unusual. They were kind of, say some Bitcoiners were saying, "Oh, Bitcoin's demonetizing gold." I was like, no, it's following real rates, right? So it was actually doing what you'd expect it to, based on its very, very long-term inverse correlation with real rates, as measured by, say, the break-even rate, right? So you're looking at kind of the forward expectation of inflation by the treasury market compared to current treasury rates. Now, I started to get a little bit more bullish on gold around March of 2021, and that started to take off, but then it kind of rolled over. And that's the part that's been a little bit surprising. So cryptos got pretty big here in 2021. Their market cap reached over 2 trillion. Gold's market cap is estimated to be maybe 12 trillion. But if you look at the portion of that is for private investment, that's more like 5 trillion, 6 trillion. There's a big kind of range there. And so if you look at the overall size of the crypto market, it's actually gotten pretty meaningful, compared to, say, the private investment gold market. In addition, I see a lot of anecdotal, people saying that if cryptos didn't exist, I'd have to buy gold. And so it's certainly, the introduction of these assets has diversified the types of things that money can go into if they have concern about negative real rates. And so my base case is that I do think it somewhat took the edge off gold. It kind of, splintered the market share of gold to some extent. So before you would have choose between, say, gold, silver, maybe platinum, right? So you didn't have many choices, but now you have gold, silver, platinum. You go into Bitcoin, you can go into Ethereum. Some of the retail traders go into Dogecoin. Like there's an endless things that they can go into if they have that kind of a inflation narrative. Now I still think that gold probably has a pretty good run ahead of it longer term.
Yeah.
And so I still like a mix of, say, Bitcoin and gold. I would be possibly more concerned about gold if I own 0 Bitcoin, right? So if you're going through this and just kind of assuming that they're going to pick your thing and not pick any of these other things as their primary inflation hedge. So my overall, kind of approach is to have like a mix of these different hard assets. So I like monetary assets like gold and Bitcoin. I like silver. I like some of the platinum group metals. I like energy. So I like a bunch of different hard assets, inflation hedges, that sort of thing. And I still have a pretty positive view of gold as well. It's just kind of interesting that I do think that some of the demand has somewhat splintered into a couple of different groups. Crypto has generally gone in these 4-year cycles that are roughly correlated to Bitcoin's halving cycle, for reasons that maybe we can't get into now. But Bitcoin drives the larger market. And every time Bitcoin's in a bull market, even though Bitcoin's scarce, tons of people come in and make their own cryptocurrencies, and they kind of just keep making them until they exhaust demand.
Before we continue, help us by smashing that YouTube like button and subscribe now to this channel. This shows the algorithm that you value the information, and it helps us spread this message. Sharing is caring. Please like and subscribe now. Thank you. And now let's continue.
And then we go through a bear market, and most of these coins never really had any use case, never had any value. Their network effects are weak. The analogy I like to use is, if I were to, people often say you can just copy Bitcoin. But Bitcoin has a very large network effect. So it has, the most energy kind of backing it up if you were to try to do a 51% attack against it, right? So that makes it more secure. And so if I were to say, want to copy Wikipedia, I can actually copy Wikipedia. I can download all the data. I can host it on my website. But then the question is, would I get that traffic? Would I basically be able to mimic the real Wikipedia? And the answer is no, because even though I can copy the open source aspect of it, I can't copy the millions and millions of links around the internet pointing to it. Yeah. And I can't copy the team of volunteers that constantly edit and update the real Wikipedia. I can't really convince them to come and edit mine instead. So I can't actually copy the network effects that makes the Wikipedia the real one. And so with Bitcoin, all these other kind of tokens come in and they make these like shadow Wikipedias, these shadow Bitcoins. They change some of the variables, and they often do very well for a couple of years. But then, 5 years later, they never really went anywhere because just like my failed Wikipedia, they failed to kind of achieve that network effect. So far, really the only coins that have had a really long-term durable aspect to them are Bitcoin and to some extent Ethereum. And even that's not a short, right? So you could have other smart contract platforms, take market share. So overall, I would be very, very cautious about holding, tokens outside of Bitcoin for long stretches of time. Obviously with their volatility and upside, people that are closely following charts can potentially make a lot of gains from trading them.
Yeah.
But basically, there's not really room for 10,000, different types of coins. A lot, the vast majority are outright kind of, scam fraud type of things. Then you have, several dozen legitimate projects. But just like many startups and many kind of, network effect things without a network effect, they're kind of destined towards eventual stagnation, much like the dot-com era. So I would just be very, very cautious with tokens, outside of the big one or two. There's been, really big bear market from 2018 to 2019. But, 4 years before that, there was another giant bear market. And then, maybe 2 years before that, there's another giant bear market. So there's kind of been these three, Bitcoin is dead moments. And those were literally as big or bigger drawdowns than the NASDAQ in the dot-com bubble. I mean, those were like 90% drawdowns for Bitcoin, which is bigger than the NASDAQ drawdown. And so, so far, Bitcoin has been like the Amazon of the dot-com bubble,
Sure.
where, it blew up and then it crashed a lot and then it came back even bigger. And it's done that multiple times. And so it's really kind of the one that's been through a number of those cycles. So far, Ethereum's been through one of those cycles successfully. And most coins haven't really been through those cycles. The big popular ones from the last cycle are almost nowhere to be found in this cycle. And so all the kind of the tertiary coins this time, so like number 3 through number 10, for example, are ones that were either not around in the last cycle or were just not very popular last cycle. And so most of them under the surface keep changing. When they have these big drawdowns, a lot of them don't come back. A lot of them end up being the pets.com rather than the Amazon. And so people just have to be very careful not to pick the pets.com.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with first-hand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active and see you on the other side.